good morning and welcome everyone to this week's edition of the Energy Action Market Wrap. My name is John Huggart, I'm the CEO here, and it's a corona-friendly version, so working from home and sharing with you the impact of the coronavirus on the markets, both from a supply and demand point of view and the pricing and the impact of your business. So we saw last week's webinar from Andy where he shared that the record lows in March across most of the states, about a 7% reduction across the NEM. We're seeing that continue into this week in April as well, and that is leading to lower average spot prices. Now, whilst we're seeing those prices come down, that's not necessarily translating into your retail rates being offered at the moment, due to they're pretty sweet at the moment with heading towards the marginal cost of generation, and certainly we see that to retain that viability, probably prices may stabilise around there for the moment. Water levels have fallen at Snowy Hydro below the below the levels that were recorded last year by about 1%, and this can have a negative impact on the firming pricing market as well, to ensure the reliability of supply from the renewable generation sources. And as a result, there'll be a reliance on gas-fired generators to provide that firming in the time ahead. The futures market continues to slide further back on the lower demand and limited buying pressure, so there is still value in locking into those energy contracts going forward. West Australia's market is tracking slightly higher, but the overall trends are continuing to see that fall. That's more temporal there. If you or your business is experiencing financial hardship due to the impact of the virus, then we may be able to help. What we're doing is working with you and the retailers to achieve whatever savings or deferrals can be achieved. Certainly some of the times we're working with retailers on the network tariff reductions to make sure you're on the best network or achieving a reset if that's possible or beneficial for you as well. If your business is in a position to do so, we recommend, certainly now, our view that right now is a really good time to lock in for a lower value. Some of the better pricing that we're seeing in the market is continuing right now. So get in touch with one of the team and we can see what's available to you in terms of extension of your contract or blend and extend that as well. There are good prices. On the gas market, while international demand affects our domestic gas market, like the electricity market, there's a limit to how far gas prices can drop before extracting gas becomes unviable. So that's what we're talking about in the international market. Now, it's shifting a bit towards pushing the oil price higher, and if that does eventuate, it can have a positive effect on other energy commodities in terms of the price increase. So we'll have to see how that plays out on the gas prices domestically, because we had seen some relief in the last couple of months. On the certificate markets update, the LGC prices have dipped even lower, now trading around $27.75 per certificate. And according to the Clean Energy Council, there's 96 large-scale projects still in construction or about to commence. Therefore, we do see that market moving into an oversupply condition. And the other reason for the lower certificate prices right now is probably some of the generators needing to tap into some revenue, selling those certificates right now while they can to secure cash flow. So unless we do see a regulatory change in the LGC or the LRATs, there will be further weakness likely in the LGC market. Other certificates have been less volatile, so SKI is now around $27.50 per certificate. And the news this week, while oil and gas producers have been slammed by perhaps their biggest ever challenge from coronavirus and the oil price crash, power and gas utilities have been more resilient. Australian energy retailers are not immune to the current economic climate and certainly will be impacted by the inevitable downturn in demand as parts of the economy shot down. But increased usage from home consumer demand will be offset a little bit by the credit risk. Just need to put in perspective though that as there's a shift from business use to home use, it's typically going from a lower margin to a higher margin segment of the energy utility business, although it does come with a higher risk of credit default. Overseas, Italian and Spanish electricity demand has dropped 20% and 10% respectively as a result of their lockdowns with coronavirus. Here in Australia, demand's dropped about 7%. Although that's on the back of relatively mild weather. But right now in business, great time to lock in your energy rates. Thanks very much for your attention this week with the Energy Market Wrap. Stay safe, everyone.